All right, good afternoon, people. It's Bruce with TWC here. Nice day today, nice bounce. Before I jump into Defiance, let me give you a recap. So the NASDAQ was up 1.36. This is sort of the expected bounce. The NASDAQ, which is like the Qs, the NASDAQ 100. The SPY or the S&P 500 1.07, not quite as much up as the Nasdaq, and then the Dow for reference purposes 1.14%. So let me give you this is just a little bit for guys that care. If you don't understand. So this is a chart of the SPY. Again, this is mimics the S&P 500, just add a multiplier of 10, right? So you're looking at 5830-ish instead of 583. So I like to show this by, but they're generally one and the same. So up 1.07. But look at this trending channel. What you do in tech analysis is you could draw parallel lines on the top and on the bottom. And what you typically are looking for and will know tomorrow. So we got a bounce right down here from this, what was a low, 573. So we've been a little bit lower. I think we touched 572 the day before, but we had closed down, right? So we're up, but we got back up to like 577-ish. So the point being, we bounce. But what you want to see is that we've sort of bottomed here and that we start. And what Elliott wave and what people do to look at the bounce is you take the top here and you say, okay, maybe this is like an A wave down. So you figure 572, you look at your 613, whatever, and then you say that's a certain number, right? You do the math on it, and Trading View and some of the other better charting systems will show you. And then you look for a 0.382, a Fibonacci number, a point 0.5, and even a 0.618 retrace. So on your bounce, you look at that distance, and let's say it's 572 to 613. So you've got, like, let's just round it and make it 40. So you got a point difference of 40. And you say, okay, typically a bounce is 0.5. So you go up 20 points from the bottom, and that would give you 592. And then you start to look for how much strength the bounce has. Is it going to stop at resistance and then start the C wave where you get an A, B, C? So there's just trying to give you guys that don't have any understanding of what people look for. Now, if you're an income collector only, this might bore you. Just, I'm going to wrap up in another minute. So the point being, my gut tells me March is going to be uglier. Okay, I've been saying we would go down. So we've gone down. So this bounce really took us back within this channel. What you want to see is it get up here and get above this 585, and you say, okay, it's gone out of this down channel. So this is likely the retrace. It takes us to 0.5 back or 0.618. And that could take multiple days here, and you go like this, and then you have one more down. Because I had said, I think it's possible we see this 555 number this month. But just giving you an indication. So if you're out there on margin and you're going, oh, okay, I got by this and everything's going to bounce. Well, yeah, but it's going to bounce. But what's the exhaustion of the bounce? So that's how technical analysis people do. And there's even some more sophisticated stuff that gets into other methodologies. But Fibonacci math was done by an Italian scientist many, many years ago, right? So it's all based on numbers. I'm a numbers guy, so for me, it's pretty easy to understand it. For others, and I'm not looking to day trade. I have day traders, and they have, like I said, you can be in Trading View, and your charts automatically calculate when you put on things, your Fibonacci levels, and all of that. All right, let's go back to what Defiance is doing. Just trying to give you the temperature of what I think is going on in the markets because I've been accurately saying it looks like this is a pullback month. And it clearly has been and likely will be, not without bounces, right? All right, so here's QQQY on Defiance. I almost stopped doing Defiance, guys, because a couple of guys said I said, yeah, I'm getting low views, because it was just beaten up. I mean, their NAV loss was so big. For those of you that don't remember, these guys converted on October the 9th to weekly. Okay, they're still the same underlying index, pretty much the same methodology, although I think because Jay at Zega is managing the options work just like he does for title or as you know at YieldMax. So what we have here is they're getting better. And shame on me for not reporting. I tracked them, but I'm not going to fall into that thing just because they're beaten down and just not reporting on it. So I'm back reporting on Defiance. As a matter of fact, since they're competitive, I'm going to start doing my weekly analysis where I compare the three because guess who's in the game now? YieldMax is in the game with SDTY and QDTY, right? And every week they're reporting. I just gave you what they did. So there's a basis to compare them against Roundhill, who has been the king of the hill, and then Defiance, who's been just whooped on the weeklies. Now, I could go into some other monthly guys, and there's big people, Neos, there's a lot of other big people that do some kind of covered calls. Okay. I just think the leaders in the methodology from an income standpoint are the Round Hills and the Defiance. Defiance's problem has been NAV erosion. I mean, serious NAV erosion. But they seem to be, when you look at total return, how far did they go down and how much did they pay and add those together and then look at a weekly result on that. So I've also changed my analysis on all of my stuff to show a 1 month trend, a 3 month, a 6 month, and a 12 month on my total returns. And then even I can look at weekly and compare, say, Round Hill to the new. Now, the only issue with YieldMax is they don't yet have their RDTY paying. I assume that's coming. Okay. And then you'll have all three. But even when you have the two biggest, the NASDAQ 100 and the S&P 500. All right. So let's get into these. So distribution 2155 for QQQY. Here's the current price. I usually take the day before and I use that everywhere. Even though I say declare, it's the price going into the morning when they're going to declare before 3-5, right? So you look at declare on 3-5 if you own these guys, ex dividend. Now the trading is over for 3-5 when I'm reporting this. So your ex dividend is tomorrow 3-6, and then your pay date is on Friday the 7th. So what would that yield be? Okay, based on this price, I could give it to you. Okay, I'm using, actually, I am. I'm using the current. So think of this as yield on cost. This is current cost. Okay, and most of these went up on the bounce. So they're all higher after 3-5 trading, which would drive the yield down. But if you owned it before, this is the closest yield. But you can see there's still NAV erosion, and you expect some of it, guys. If you're paying high yields, you're going to get some of that, unless you're in a single stock and the stock's just in a huge uptrend, right? But we all know what happens to when it's paying really high and a huge uptrend. You can catch the other side of that. All right. So that's what you have. And what I've done over here, in some fairness, is I've started tracking them since the 10-9. 10-9 was the first weekly distribution. Prior to that, they have a long, year and a half before that of just paying monthly. And I have that data, but it's way uglier. in terms of the NAV loss, trying to give them the benefit of the doubt and see how they perform on the weekly. So 0.226, a lesser yield on the S&P. Normally, I should reverse these because most of the time I show the S&P one first and then the NASDAQ like I do on Roundhill and stuff, but so be it. All right, 60% yield. So the Russell, they're paying very well on the Russell, and that's helping them because if you look over here on your annualized yield, and I say annualized because they only have 148 days, right, since 10/9 of paying these series. So you have a 39 yield annualized, a 30 yield, and up at a 47. But look at your NAV losses. This guy that's paying more has got a NAV loss of 52. So what does that do here? All these numbers are back in the red. But when I drive it down and do my weekly analysis, these guys are trending up. They are doing better. And then you do an equal week to week. So, it's the old world of when I look for a statistic, what's the perfect statistic? Well, it depends on what I'm looking at. If you're saying, hey, I've been considering switching out of Roundhill and go to the new Yield Max, then you want to look granular at the last couple of weeks because that's Max's game the last couple of weeks, right? That they've been in our SDTY and QDTY. So those are but in some fairness, you also want to say, well, I like the guy that's been in it for the longer period of time. Then it's easier to compare Defiance and Roundhill. So I don't want to get too excited about Max's efforts until we see them really have a good month's worth. But I'm still going to do my analysis at a detailed level of the three funds. All right. So this is older, but just while it's on the screen. So SPY T, they're targeted. These guys are paid monthly. So they just declared on 228 and they would have paid on Wednesday 3/4, all three of them. Now oil is bottoming. It's very down and beaten up and you can give that some consideration. I expect oil to bounce at some time and to bounce pretty strongly. In other words, I think it's bottoming in a multi-month issue and I see it trending up again, right? We still need it as much as everybody wants solar and wind and all these alternative green. It just isn't there yet. Even people will tell you that are in the know. My favorite is uranium. You talk about a sector that's out of favor right now. Oh my God, there's bargains galore on spot uranium and many of the uranium miners. It went much lower than I expected. I've been selling puts like crazy because I'm willing to collect the income. And if I get it put to it such a low price with good income, then I'm happy to take that. One of the ones I've been doing that on is DNN, one of my favorite uranium miners. There's a lot of good uranium miners. You can go out there and do that on CCJ, Cameco. There's some good ones, but they're really beat up. Um, so URAX might not be a bad time for Defiance. I didn't look at it right now, but I imagine if I looked at a chart on URAX, that it would be pretty ugly. Let me pull one up. That's a 2x Defiance. Again, don't hold 2x stocks for long periods of time. Jump in when you expect you see the upsurge happening, and then you can go out and take a look at that. Let's do a 1 year. That's a lousy chart. All right, guys, I'm trying to find where I have my other chart. Oh, here we go. I brought it over here. I'll just do it on the screen. That I work with a two monitor system. So I drag things from one monitor over to the screen. I already had it here, but it wasn't the active. All right, so now you're looking at what I've got here. Again, what do you see here? Here's URAX, which is a 2x uranium um, long. And look at this. Up high when it started, right? So in a way, they picked a topping time, comes down, bottoms, runs up, and just in a severe downturn, up 4.85. If you ask me, if we haven't bottomed, is it possible that it goes down into 880 or drops below? Sure. But the point is, this is a very low, super undervalued, right? With all the AI power needs and just in general, the first world countries need a lot of power. You look in China and you look at Brazil, a lot of places are still, they use oil, but they're also using coal. The US is trying to say it's a dirty, and it is compared to natural gas and oil, but uranium is the most efficient by far, especially with these small modular reactors, SMR. So I fully expect this thing to come back to 15, like at a midpoint. Okay. It could go on back up and triple top. And guess what happens when you get to triple tops? They typically, you knock on the door 3 times, as Gareth Soloway says, and you break out. So I see the odds here. Would I be in it right now? Maybe not. But if you've got a 30, 60-day horizon, you may want to catch it if it goes back and touches back here when we have more bearish activity in March. But when these sectors take off, look out. All right, guys, that's what I got for you. A couple of just trading and technical things besides the report. Hope you enjoyed it. I know some of you say, hey, Bruce, just give me Defiance. But the truth is, if that's all you wanted, you don't need to watch the video. You just go out to the Defiance website and take a look at it. All right, guys. Again, Bruce with TWC, not a financial advisor, not financial advice. Have a great evening and rest of your week. Bye for now.